Hello, my name is Mayanka. I am accounts and finance trainer from Uplatz. Today, we are covering the topic of IND AS 2 inventories, Indian Accounting Standard 2 inventory. In this IND AS, we will cover the objective of IND AS 2, scope of IND AS 2, definitions, measurement of inventories, techniques for the measurement of cost of inventories, recognition as an amount of expenses, and we will also discuss disclosure as per IND AS 2. First is objective. What is the objective of IND AS 2? The objective of the IND AS 2 is to prescribe the accounting treatment for the inventory. Is that accounting standard 2 is that IND AS 2 contain the provision and it is prescribed the accounting for the treatment of IND AS, for the treatment of inventory. The primary issue in accounting for inventory is the amount of cost to be recognized as an asset or carry forward until the related resources are recognized. Is that there is the main issue in the accounting of inventory is that the amount of cost is to be recognized as an asset and carry forward until the related revenues are recognized. This IND AS deals with the determination of cost. Is that by this IND AS we can understand which costs are to be considered as inventory cost or which cost is to be considered as expenses and it is subsequent recognized as an expenses including any written down to the net realizable value. This standard will also provide the guidance on the cost formulas that are used for the calculate the amount of cost of inventories. Is that the IND AS2 is the standard which is prescribed the accounting treatment of inventory and it is provide the instructions and how to determine or how to recognize the cost of inventory. This standard is also deal with the determination of cost and it is also provide the guidance in the respect of cost formulas which is used for the calculation of cost of inventories. What is the scope of IND AS2? The scope of IND AS2 is as follows. IND AS2 is applicable on all the inventories. IND AS2 is applicable on all inventory except financial instrument and biological assets. Is that IND AS2 is applicable on all the inventories, but it is not applicable on financial instrument and biological assets. This standard does not apply to the measurement of inventories which are held by. Is that this standard is applicable on all the inventories, but this standard is not applicable on the measurement of inventory which are held by number one is producer of agricultural and forest produce. Agricultural produce after harvest and the minerals and mineral products to the extent that they are measured at net realizable value in the accordance with well established practice in those industries. Is that the provision of IND AS2 is not applicable in the case of producer produce of agriculture and forest product, agriculture product after harvest and minerals product to the extent when they are measured at net realizable value. When such inventories are measured at net realizable value, then changes in that value are recognized in the statement of profit and loss account in the period in which change is made. Is that when such inventory are measured or calculated or recognized at net realizable value, then the changes which is arise, then the differences which is arise due to such changes will be considered as a profit or loss, and it will be recognized in the statement of profit and loss account for the period in which such changes made. Commodity broker traders who measure their inventory at the fair value less the cost of sale, then such provision of IND AS 2 will not be applicable on broker traders. When such inventories are measured at fair value less cost of sale, then the changes in fair value less cost of sale are recognized in the statement of profit and loss account in which such changes are made. Is that the IND AS is applicable on all the inventories, but it is not applicable on financial instrument and biological assets, and it is also not applicable on the measurement of inventory which is held by producer of agriculture and forest product, agriculture product, minerals and minerals product, and broker traders, community or brokers and traders. Definitions. Number one is the inventory. What is the meaning of inventory? The inventory are assets. The inventory are those assets which are held by the entity for the sale in the ordinary course of business. Is that the inventory are those assets which are held by the organization for the sale in the ordinary course of business, and in the process of production for such sale, in the process of production for such sale, or in the form of material or supplies to be consumed in the production process or in the rendering of services. It read the inventories are those assets which are held for the sale in the ordinary course of business or which are used in the process of production for such sale, or which is in the form of material or supplies to the consume in the production of any goods or for rendering the services. Then these assets is to be known as inventory. What is the meaning of net realizable value? The net realizable value is the estimated selling price in the ordinary course of business less the amount of estimated cost of completion and the estimated cost which is necessary to sell. Is that the net realizable value is equal to expected selling price less total production and selling cost. Net selling price is normally the selling price less the amount of expected cost which is incurred to make necessary to make the sale. What is the meaning of fair value? Fair value is the price that would be received to sell an assets on or paid to transfer a liability in an orderly transaction between the market participant at the measurement. Is that the fair value is a price at which at which at which or that would be received. The fair value is the end price that would be received when there is a sale of any assets or paid to the transfer a liability in an orderly transaction which is made between the market participant at a measurement date. Then such price is to be known as fair value. Measurement of inventory. How we will measure the inventory. Normally, the inventory shall be measured at lower of cost or net realizable value is that the inventory is to be valued at cost or net realizable value, whichever is lower. Cost of inventory. What is the component of cost of inventory? The cost of inventory includes cost of purchase, cost of conversion, and other costs. The cost of inventory shall comprise number one, all cost of purchase, number two, cost of conversion, and number three is other costs which are incurred in bringing the inventory to their present location and present conditions. Is that it is include purchase cost, cost of conversion, and other costs which are related to the such item or such inventory. What is the meaning of cost of purchase? Is that the what are the components of cost of purchase? The cost of purchase of any inventory include number one, the purchase price, number two, import duty and other taxes. The cost of purchase of inventory includes and comprises the purchase price and the import duty and other taxes other than recoverable taxes, and transportation, handling, and other costs which are directly attributable to the acquisition of finished goods, material, and services. Is that the cost of purchase includes purchase price, import duty, any other taxes other than recoverable taxes, and the transportation cost, handling cost, any freight or any other cost which is directly related to the acquisition of fixed goods, material, and services. Any other trade discount or the rebate or any other similar item are deducted in determining the cost of purchase. Is that when there is any amount of discount or any rebate, then such amount of discount and such amount of rebate are deducted when we are determining the cost of purchase. What is the meaning of cost of conversion? Cost of conversion includes indirect material cost, indirect labor cost, other fixed overhead, variable overhead. Is that the cost of conversion of the inventory include cost which is directly related to the units of production such as direct labor. Is that the cost of conversion includes the cost which is directly related to the such unit, such a production of unit, just like direct labor cost. They also include a systematic allocation of fixed and variable overhead that are incurred in converting material into finished goods. Is that the cost of conversion also include the systematic allocation of fixed and variable production overhead that are incurred in converting the material into the finished goods. Other costs. What are the other costs? Other costs are included in the cost of inventory only to the extent that they are included in bringing the inventory to their present location and present condition. Is that all the expenses which are incurred to the extent that they to the which are incurred in bringing the inventory to their present location and the present condition are to be added in the purchase cost. For the example, the cost of designing product for a specific customer in the then it will be included in the cost of inventory. Is that when there is any expenses of designing, which is a which is a spend for the requirement of customer, then such amount of designing cost will be included in the cost of inventory. Examples of the cost which are excluded from the cost of inventories and which is recognized as expenses in the period in which they are occurred is that there are certain costs which are excluded from the cost of inventory and considered as an expenses and transferred to profit and loss account. Number one is abnormal amount of wasted material, labor and other production costs. Abnormal amount of wasted materials, labor and other production cost. Storage cost, unless those costs are necessary in the production of process before a further production stage. Administrative overhead that do not contribute to bringing the material in their present location and their present condition. And selling cost. These all are the example. These are the example of the costs which are not the part of or which are not to be included in the cost of inventory. Techniques for the measurement of cost. There are certain techniques which are used for the measurement of cost of inventory, which are number one, standard cost method, and number two is retail method. These methods are used by the organization according to their convenience. Is that in which method the organization is comfortable for the measurement of cost, they can apply it. Cost formulas. The cost of inventory shall be assigned by using the FIFO method or by weighted average cost formulas. The entity will calculate the cost of the inventory by using the FIFO method, is that first in first out method, or by using the weighted average cost method. The entity shall use the same cost formulas for all the inventory which are having the same nature or use to the entity. Is that when there is any entity which is having same nature of material, then a same cost formula should be used by such organization for the calculation of the cost of such inventory. If there is any entity which is having different nature of inventories, then the different cost formula can be used and it may be justified. Net realizable value. The cost of inventory may not be recoverable if these inventories are damaged. Is that if the inventories are damaged, then the cost of inventory may not be recoverable. If they have become wholly or partially obsolete, or if their selling price has declined, then the inventory are usually written down to the net realizable value item by item. Is that when there is any inventory which is obsolete partially or fully, or there is the decline in their selling price, then such inventory are to be calculated or are usually written down to their net realizable value, and it is written down by item. Estimation of the net realizable value are to be made. Estimation of the net realizable value are to be made on the basis of the evidence which is available at the time of estimation, which is made on the basis of amount the inventory are expected to realize. Is that the amount of net realizable value is to be estimated on the basis of evidence which are available at that time for the purpose of estimations. Estimates of net realizable value also take into consideration for the purpose of which inventory is held is that when we are estimating the amount of net realizable value, then the consideration for the purpose of which the inventory is held also used for the estimation of net realizable value. Materials and other supplies which is held for use in the production of the inventory are not written down below cost if the finished product in which they will be incorporated are expected to be sold at or cost ever cost is that the amount of the material and other supplies which is held for the use in the production of the inventory are not written down below the cost if the finished goods which are incorporated by the use of these material are expected to be sold at or at the at or above the cost price. A new assessment is made for net realizable value in each subsequent period. Is that the organization will make the new assessment in the respect of net realizable value of the inventory in each and every period. Recognition as an expenses. The of amount of the cost is recognized as an expenses. When the cost is recognized as an expenses, when inventories are sold, then the carrying amount of those inventories shall be recognized as an expenses in the period in which the related revenue is recognized. Is that when the inventory is sold, then the carrying amount of the inventory should be recognized as an amount of expenses, and such amount of the expenses shall be recognized in the period in which the revenue is recognized. The amount of any written down of inventory to net realizable value and all the losses of the inventory shall be recognized as expenses in the period in which such a loss or such a written down occur. The amount of written down of the inventory and any of the losses which are related to the inventory shall be recognized as an expenses in the statement of profit and loss account in the period in which such loss occur. The amount of any reversal of any written down value of inventory which is arising from an increase in net realizable value shall be recognized as a reduction in the amount of inventory, and it should be recognized as an expenses in the period in which the reversal occurs. Disclosure. What are the disclosure as per the Indian Accounting Standard 2? The following disclosure are to be made as per the IND AS 2. Number 1, the accounting policies which are followed or adopted by the enterprises in measuring the inventory, and this also include the cost formulas. Is that the entity will disclose the accounting policies which are used by the entity in measuring the inventory, and it will also include the cost formulas. The entity will disclose the total carrying amount of inventory and the carrying amount in the classification to the inventory to the entity. The entity will also disclose the carrying amount of inventories which is carried at fair value less cost of sale. The carrying amount of the inventory which are carried at fair value less the cost of sale. The entity will also disclose the amount of inventory which is recognized as an expense during the period. The entity will also disclose the amount of written down of the inventory which is recognized as expenses. The amount of written down of inventory which is recognized as an expenses. The entity will disclose the amount of any reversal of any written down that is recognized as a reduction in the amount of inventory as an expense. Is that the entry is that the invent is that the entity will disclose the amount of any reversal of any written down that is recognized as a reduction in the amount of inventory and recognized as expenses. The entity shall also disclose the circumstances or the event that lead to the reversal of written down to inventory, written down of inventory. The entity will also disclose the carrying amount of inventory, the inventory which are placed as security for the liabilities. And the entity will also disclose the information about the carrying amount which is held in different classification of inventory and the extent of changes in these assets is useful to the financial statement user. Common classification of the inventory are merchandise, productions, suppliers, materials, work in progress, and finished goods. Is that the entity will also disclose the information about the carrying amount, which is related to the different category of inventory, and if there is any changes in the rest and the extent of the changes in these assets, which is the useful to the financial statement user. The common classification of the inventories are normal retail, production supplies, materials, work in progress, and finished goods. This is the another disclosure. Number disclosure. An entity adopt a format for the profit and loss that result in amount being disclosed other than the cost of inventory, which is recognized as expensive during the period. Is that the entity will adopt a format of profit and loss, which is the very much useful for the disclosure of other than cost of inventory, which is recognized as expensive in the period. Under this format, the entity will analyze and expenses by using the classification based on the nature of expenses. In this case, the entity discloses the cost which is recognized as an expenses for the raw material and consumable, labor costs and other costs together with the amount of net change in the inventory for the period. These all are following disclosure are to be made by the organization in its financial statement as per the IND AS 2. This is our IND AS 2, which is cover the provision which is relating to the inventories. This then all other IND AS are covered by us in our other videos. Thank you so much.